All right, testing the mic 1 2 1 2. Testing mic test. All right, thanks. Good morning, everyone. Welcome to the Pro Trader and Plus, the PCE Price Index. My name is Lee Goldstein, Trading Director at 10-Minute Trades. Please remember, all the trades we discuss are for educational purposes. It is possible to lose money trading futures. I'm not a financial advisor, so please trade carefully. Okay, everyone, good morning. Certainly in Pennsylvania it's morning. Some of you are on your afternoon, and some of you have no idea where you are. Let's look at what we've got going this morning. So the word that I'm hearing is people are expecting the price index to be a little bit elevated. That's what I'm hearing. A little bit elevated. That would not be good news. All right. The PCE index is an inflation index, and if it's lower, then it continues the trend that inflation is lower. Okay. PCE. It also, we do have spending, income and spending is part of this report. So it's a price index, like a job index, and it is year over year, month over month, core, non-core. Core is with and without energy, and what's the other major category? I always forget. Let's look it up. So what is core versus non-core results? Oh my God, sometimes AI is so annoying. Better way to ask it is, what is core GDP versus non-core? Let's try that. GDP. Energy. Uh, Come on. Again, they're not. Somebody tell me. I forgot. You got energy. What's the second? There's two major categories: core versus non-core, and they're just not defining it well. Let me ask one more time. And let's see. So you've got core retail versus non-core retail. Here we go. automobiles and gasoline, energy and food. That's it. That's it. That's it. Energy and food. Not part of core. Okay, energy and food are the two major categories that are not part of core. And the reason they separate them is because those are more volatile. So they want a little bit more of a rational number in that index. What's interesting is they're usually not that far off from each other. Anyway, nevertheless, what they're expecting is a slight bump in the PCE price index, but not hearing anything out of the ordinary, so we don't really expect an anomaly from the news today. Not expecting an anomaly. All right. Looking at the DMM, but even more importantly, looking at the spike sheet really is what gives us a good idea of the way this report has been moving. If we look at the spike sheet on gold, the spike sheet is when we look at how's this report been moving at the exact moment of the news. Okay, that's what a spike sheet is. We create spike sheets. It only moved 16 ticks last month. April, it was with GDP, and it was only 33 ticks. That's not that big of a move. GDP has also been somewhat muted over the past months, but this particular report has been unbelievably muted. Going back to a year ago, all right, let's go back a year. We have had no moves except when it was with GDP reaching 30 ticks. This has been a very muted report for the past year. We've had 8 ticks of movement, 13 ticks, 18 ticks, 8 ticks in September. So our DMM has to reflect the muted moves, right? You're not going to have gigantic tiers when you've got muted moves, or you're not going to get filled ever, right? In December, 21 ticks. And my boss does different analysis than Chantal and I do. That's why sometimes there might be differences in the amount of ticks that he looks at. But usually we're pretty close. It's not dramatically different. Okay. Um, the only big difference that we have is March. I'm just curious. He's showing a large 70 tick move. Let's see what we're showing in March. We're not showing that size of a move at all in March. So, and it doesn't make sense if you think about it. Um, oh, no, no. Okay. So, I mean, for whatever reason, it's the second move that was over 70 ticks. The original tier move was 23 ticks, which is exactly what we said. We said 22. So we're in agreement. For some reason, he put the 70, the secondary move was in there. I think it should be 23 ticks in there, to be honest. Nevertheless, the data does agree that this report has been muted. So our tiers, and I am going to trade the trap trade, and I'll trade the MNQ breakout in a different prop account. I'll trade both. I will trade both. But I always prefer, even though yesterday we had a lousy um, trap trade on what was the report? Now I'm drawing a blank. What was the morning report yesterday? Somebody remind me. What the heck was it? Flash. Was it Flash? No. Was it GDP? Yeah. Final GDP. Yeah. It just kept moving in one direction. And that happens. I don't anticipate that happening on this report. This report it just hasn't been as important. So I'm going to take a trap and the trigger time is 8. Now, the only thing that's concerning, and it's the way gold's been behaving. Gold's been tough. It's down $58. So, I mean, the markets are up, gold is down. It's down a lot. The only good thing is it's testing the low right now. So we should see a pull off the low and a retrace, giving us an opportunity for the report to move in both directions. So gold just tested the low. So if you want to do something crazy, right? You want to do something, it's not crazy, but it's not recommended time to trade. But this is an interesting long in gold with your low of the day as your stop, because gold is going to move off of this low. I don't think it's going to keep testing low after low after low after low. If it does, it'll ruin your trade. But otherwise, there's a pretty good opportunity gold's going to pull back off of this low. So for someone who's not that interested in maybe trading the news, there might be a very interesting trade before the news on a long gold here, just for a retrace. There's risk because gold is very bearish. But we see this behavior all the time. Look at the retrace here, 650-ish. This morning it retraced off the low. And look at what happened here. It retraced nicely off the low. It's pretty common behavior for gold. The thing that you're fighting with is how many tests of the low are going to take place before you eventually get that retrace. It might be so many that it ruins your trade, right? So micros is not a bad way to experiment with this kind of a move and big stops. So, if you get it wrong, a couple of $100 isn't going to blow up your account, right? Anyway, it's a trade idea that as we're talking, it's not working yet because it's still making lows. That's the challenge of trading new lows and new highs. You never know when they're done making the new highs and lows. That's the challenge. It's still, I like those trades because if you can survive them, there's very often really good changes in direction. All right? It's just a trade idea. Trade idea. For us this morning, taking our normal, doing a normal trap trade, triggering the trade at 8:29:55. It's an 8:30 event. It's definitely counter trend, TJ, which adds risk. But there's going to be a retrace. It's a guarantee. You can guarantee there will be a retrace. It's guaranteed. It's 100% it will happen. The timing and the level is the problem. And the fact that it is a counter trend trade adds risk to the trade. Absolutely. But it's going to change direction. It could be a tiny change in direction, too. It could be a complete disaster trade. There's no guarantee, right? But more often than not, it's going to do what it did at 655. You're going to get that counter trend trade. 829.55 on the trap. It's a good way, in my opinion, to do some prop trading because you have a system. If they ask you to prove your system or explain your system, it's easy to explain. It's a good prop methodology, particularly with Apex, that makes a lot of demands on you to prove your setups. Tier 1 is going to be a 13, and Tier 2 is going to be a 25. I'm going to label this GC Trap, and I'm going to trade it in number 12. that's my trap trade. One more time from the beginning. Trap trade, right click the chart, double click trap trade. 829.55 on the trigger. You are now getting your change in direction on gold, by the way. 829.55 trigger, 25 stop, 13 and 25 on the tiers. Choose your account, label your trade. By the way, hello, the folks on YouTube that are watching us. Hit the like button, please. Make sure that your chart trader is on the same account that your trap trade is on. All right, and you can turn on your trap trade. I'm also going to put a gold reverse continue on the same chart. Add a second strategy as a reverse continue. That would be double click news trader. And we'll take one position. We'll go for a 25 tick target. Remember, for a reversal or continuation, all you need is a position, a target, and a stop. So I'll go 25 ticks, 25 stop. I will label it GC reverse, and it'll be in the same account as the trap trade, and it won't be used until the trap trade's over or doesn't fill, if it's used at all. It's discretionary. When you apply a reverse continue and then enable it, you get your buttons, instant long and instant short, that let you enter the market when you so choose by pressing the button. Okay, then we have our MNQ setup. This is a pretty new setup, all right? It's a breakout, and we're going with a bracket of 40. 829.59 on the trigger. The bracket is 40. It should be plenty big for this event. Targets of 25-ish. Anywhere between 20 and 75, in my opinion, would be fine. And I used the target one stop move on an MNQ trade to break even -5. Yeah, Manding, I'll go over it for you again. I'll go over. Let's start. Here's the MNQ setup. I'll go over all of it for you again. No problem. So here's the MNQ from scratch. All right, MNQ from scratch. Right click your chart. Right click your chart. Click on strategies. All right. Double click news trader. Okay. Trade type is already on breakout. You don't have to change anything. Activate time. East Coast time is 8:29:59. East Coast time. You should set it to your local time. All right. The bracket on the MNQ is 40. I'm using targets. Target 1, 25-ish. Target 2, up to 75-ish. Target 1 stop move. If you hit your first target, it will move your stop. I like to move it to break even, BE -5. That means 5 ticks before it gets to break even. It could be BE, it could be BE -3. This is not etched in stone as super has to be exactly what mine is. I think the further away from the first target is not so bad because the MNQ can chop a bit. If it continues in your direction but pulls back first, you don't want to be stopped out. So sometimes we don't even want to touch the stops. The total stop on the MNQ is 100. It's only 50 cents a tick. And then I'll label the trade MNQ breakout or BRK MNQ, and it'll be in my other prop account. And I'm going to set the time for a moment to 0. because I want to see the bracket width. So I want to be in sim before I choose my account. I don't want to test the brackets in the real account. So my software right now is set to sim for a minute. When you enable a 0 time trade, your brackets will trigger. So I'm just looking. I don't want to trade like this, all scrunched up. That's all I'm doing is testing the width. Now I'm going to cancel the trade and go back and put the time to the correct time, 8:29:59, and then choose the right account for the software. Account, not sim. All right, apply it and OK it. Put chart trader on the same account so you see your orders when you get to that point. And now my breakout's set. Okay. The gold trade. There's two setups for gold. We have a trap trade and a reversal trade. So your chart should be on GC 825. You're going to right click the chart. Click strategies. You're going to click trap trade. Twice you click it and it shows up under configured. Position one, size 1 is 1. That means you have one contract for the first order. Position size 2 is a 1. One contract for the second order. If you really believe in your trade, you could add contracts. That's how you would add them. The next thing we need to adjust is the activation time. 8:29:55. 5 seconds before the news is released, our orders will be on the chart. 8:29:55 East Coast time. Stop is 25. Tier 1 is 13 ticks. Tier 2 is 25. If you wanted to reduce risk, you could only trade the outer tier, and that would be tier 1 would then be 25, and tier 2 would be 0. Personally, I don't like doing that in most cases because you're just increasing the odds of not getting filled. Tier 1 is 13, Tier 2 is 25. Label the trade, GC trap. Choose your account. Okay. Apply it and OK it. And then make sure your chart trader is on that account, or you won't see your orders. Okay, so the trap trade is ready. And then turn it on by clicking the enabled box. Put a check in there. The reversal setup, right click the chart, click on strategies, double click news trader, and then you'll see breakout is highlighted in trade type. Change it to reverse continuation. Gold is $10 a tick. I'm just trading one position on the reversal. Position 1 is a 1. And I'm just looking 25 tick target, 25 tick stop. That's all that needs to be chosen. Everything else is 0. And then I'm choosing the account, same account as the trap trade because it's on the same chart. You don't want to be fumbling around for different charts in the middle of a fast moving trade possibly. So choose the same account as your trap trade. Label it GC reversal. You don't have to label it what I label it, but just label it something different from your trap trade. Then you apply it and OK it and enable it. When you enable it and put the check, it gives you your buttons for instant long, instant short. Notice how our long trade would have worked out as long as you had a big enough stop. Okay? So gold is set up. Now we do have a Canada GDP trade this morning that we're kind of ignoring because Canada GDP is not a well-performing setup. Okay? And we made a note of that on the DMM. Canada GDP My notes are don't even trade it. Okay? It really should not be traded. That's how poorly it's been behaving. We have historically we have a DMM for it because it's one of those reports that years ago it was a good mover. All right? So let's watch it by setting up a sim trap trade. I'm not even going to pay attention to it. Right click the chart, click trap trade, but we will have it videoed so we could analyze it when we're done. Position 1 is a 1, position 2 is a 1. Canada's $5 a tick. 829.55 on the trap. Most trap trades we trigger them 5 seconds before the news. Stop is 20. Tier 1 is 12. Tier 2 is 25. I'm leaving it on sim. 6C trap. All right. Now, one thing you can do, I'm going to put the time on 0 just for a moment. So, because I'm not going to pay any attention to this trade. So I want to see where my tiers are so I could just leave it alone, but we can analyze it intelligently. So I want to make sure I can see all the orders. I want to see the stops, the 2 orders below the current price, 2 orders above the current price, and both the emergency stops. So if you set your time to 0, you can see where your orders would show up if the trade executed right now. There will be price movement, so that's going to change a little bit. But it will give us, it shouldn't change so much that we can't leave the trade alone and just not watch it and see what happens. 829.55 on the trigger time, a 20 stop, tiers of 12. Tier 1 is 12, tier 2 is 25. Account is on sim. I will not pay attention to it at all, probably, okay? I am using on the gold trap 25 stop, and I'm actually using a 25 stop on my reversal also. But yes, it's adhering to the 25 stop on gold. With a trap trade, you almost always have time to adjust any part of the trade that you need to. Almost, you just have time. Most trap trades don't execute and finish in a second. It's great when they do. It's pretty rare, though. Um, we're almost at the trade already. A quick look at last month. What happened? Quick look at last month's video. Let's see what happened here. Fairly similar setup. Okay. Fairly similar setup. We were also doing the MNQ, traded them both. I think last month might have been the first MNQ trade for this setup, for this event. The MNQ popped up, filled. Gold looks like it didn't fill. It's been, like I said at the beginning of the room, it's been a very quiet trade for a year. Maybe there's been one that was surprisingly big, but overall, our tiers are rather small. MNQ finally started to follow through. Hits the first target, stop, moves to safety, and then did it go? Yeah, then it went up and hit the second target. All right, let's see what happens. Canada will just leave alone. Not a lot of news, considering there's two reports. One report, really. PCE is one report. There is real personal consumption in there. That's always in this report because that's related to income, personal spending. And we will be back at 9:30 for Revised University of Michigan. That will be our last event of the week. All right, 45 seconds. I think we're going to get a fill. I'd be surprised if we don't get a fill on gold today. I think I don't know what direction I want to be filled. Yesterday, I was happy we were filled in the direction we got filled, and it didn't work. So, always, Arthur. Almost always. Yes. So our orders will show up right about now on the trap trade. Spread it apart a little bit so you can manage it. MNQ breakout on the right. So MNQ did a whipsaw. Gold is filled. Now, I'm getting ready to cancel my outer tier if it'll go up a little more. I will cancel. Well, no, there's no tier to cancel. It filled two orders. You don't have to sweat that. I'd like to see it go up a little bit. Um, get your stop. I don't want to lose profit here. I'd like to see it move up a little bit more than it's doing. I'm not prepared. If it just keeps going down from here, then I'm going to get stopped. So you had an opportunity to take a $200 profit. I'm not going to let this stop me at this moment. Not yet. I'm really unhappy with the way this, not taking a fast profit was a mistake, obviously. There was about a $200 profit. Now, the problem is if gold decides to go test that low, this trade's not going to work. The MNQ somehow survived, but if gold doesn't change direction here, now you've got positive and negative news. It's losing momentum, right? So I keep expanding my stop. I want to survive for a change in direction that maybe not isn't going to happen because we just have too darn strong of a negative flow. I would combine my orders because I just would love to just see it get above our entry, which is not easy. Look how far away we are. I'm not optimistic this gold trade's going to work. The MNQ hit the first target, survived that crazy whipsaw action. Now, gold's starting to move up, so I will increase my target because I've already taken a lot of risk. Whatever happens, the real stop should be below the low, which is it'll blow up the account. That would cost me $39 to reset the account. But then also you've got to go up so much, right? As it is now, we're getting that change in direction. All right, we're getting it. All right, $260, what I call a patience profit on that trap. You had to be willing to expand your stop the way that I did, okay? But that was a nice little profit. The MNQ, not, it's just we're going to look at it. We got our first target, and it looks like it's going to pull away, pull back, and just be a tiny win. It's the one thing I hate about micros. If your target, $10 profit, it's almost not worth living, if you know what I mean. And then Canada didn't even fill on the trap. You absolutely should have canceled Canada. That trade should be canceled. There's no reason. There's no behavior at all. Their GDP was pretty much as expected, a tiny bit lower than as expected, which is not good news. The MNQ really looks like it's negative news, but you're also fighting a positive trend in the MNQ. You're closer to the high. Had we not moved our stop, you'd still be in the trade, right? You could still be in that trade. Looking at the news, the PCE price index was hotter than expected, as they thought, but not by very much. And year over year was as expected. Personal income way down. That's extremely bad news. Extremely bad. So, do you want to take a chance? We didn't set up an after the news trade on the MNQ, which certainly you could have, and I'm certainly glad we got a miracle reversal in gold because gold is negative. We really had a gift from the market gods that our trap trade worked. Okay? Because look at the pressure. You have $61, gold is down. We got a little bit of luck. Sometimes you get lucky. And what did I say? Where should the stop have been? Right here. Let's see. I'm very curious to see how far does it break this low. That's where your stop should have been on the trap trade, regardless of how many ticks it was. That's the right place. It gives you the best opportunity to survive the trade. If it keeps making new lows, it's still going to be extremely difficult to tolerate that stop because it was very big. It was at least probably double what our DMM value was. It's more than $1,000 of risk on a trade that only gave us a profit of $260. It was a lot of risk. Let's just watch for 1 minute here. I'm just curious to see what the price action does. It's going to reverse eventually. We know that, right? You could go all day with making new lows before it reverses. That's rare. It's probably not going to happen that way. But on the trap trade, if you just left your stop to sit, you would have lost. If you did what I did and increased the stop until the momentum slowed, then we had an opportunity to get a little bit of a market gift in a big, quick reversal that gave us a profit. I'm just wondering what happened to you out there. Tell me what you wound up doing in the room. What did you do? Ray, you're still in the MNQ. And that's the reason Ray's still in the MNQ is because he didn't move the stop to safety when target one was hit. That's the negative of moving your stop to safety if target one gets hit. Sometimes it will prevent you from making a bigger profit. If the price reverses enough to hit your stop and then continues on its merry way in the profitable direction, you can lose that profit. but you get out of the trade with a win. Sometimes it's a big deal because you get a whipsaw in a very expensive trade or a high risk trade like a GDP where maybe it'll hit your first target trading gold full size, right? Not micro. And you have a profit of 200 because your first target was 20 ticks. And then it reverses on you, but you moved your stop to safety, so you protected part of those 20 ticks. There's no way to know what is always best. You have to weigh the risk when you make your decisions. Nobody could say, well, this report always, you should move your target one stop, always on this report. It's not an always. I hope I made that clear. And yeah, like TJ is saying, move the gold stop, but didn't touch the MNQ. Why? Couple of reasons. MNQ, you don't really have to worry that much. Is a MNQ trade going to blow up your account? Probably not, unless you're trading, 15 contracts. Um, with gold, you have to be more proactive, I believe. With a trap trade, sometimes these days in these markets, uh, you have to be willing to increase your risk so you don't get stopped. And it doesn't always work. There's no guarantee it's going to always work. But what's interesting is gold had a pretty strong move, even though the news was expected. In other words, they did expect the news to be a little bit hot. And it was, it was point 0.1. Point 0.1. That's not huge. It's not an anomaly kind of result. And if you don't know what I mean when I say an anomaly type result, let's put it into like a oil storage report. If they're expecting 1 million barrels of a build and you get 10 million, that's a big difference. If you get 1 million.1 when they're expecting 1 million, that's not an anomaly. All right? The anomaly can create a much bigger response to the news. A lot of times we like an anomaly. In a breakout, often we like an anomaly because an anomaly will often create a big move in one direction. All right. Okay. Thank you, everyone on YouTube, for watching our trading this morning. Hit the like button before you leave. We're going to close out our YouTube stream. And this is our last, is this our last stream of the week? Yes, it is. Okay. So thank you.